Imagine waking up one morning to find that the global economy has been turned upside down overnight, with markets plummeting and trade wars escalating, all due to rising geopolitical tensions. In this video, we will explore the impact of these tensions on global markets this quarter and what it means for investors and consumers alike. To understand the current state of global markets, we need to take a step back and look at the big picture. The global economy is a complex system with many different factors at play, from the strength of the economy in the United Kingdom and the United States to the growth of emerging markets in countries such as China and India. One of the key drivers of geopolitical tensions is the rise of nationalist sentiment in many countries around the world. This has led to a shift away from globalization and towards protectionism, with countries such as the United States imposing tariffs on goods imported from other countries, including China. This has had a significant impact on global trade, with many companies feeling the effects of these tariffs and looking for ways to mitigate them. Another factor that is contributing to geopolitical tensions is the increasing competition between major world powers, such as the United States, China, and Russia. This competition is playing out in many different areas, from the military to technology to trade and economics. As these countries jockey for position, it is creating uncertainty and instability in global markets, which can have a significant impact on investors and consumers. So, what does this mean for investors and consumers? For investors, it means being cautious and diversifying your portfolio to minimize risk. For consumers, it means being aware of the potential for price increases and supply chain disruptions, and looking for ways to save money and reduce your exposure to these risks. In the next section, we will take a closer look at some of the specific ways that geopolitical tensions are impacting different sectors of the economy, from technology to energy to finance. The technology sector is one area that is being heavily impacted by geopolitical tensions. The trade war between the United States and China has had a significant impact on the supply chain for many technology companies, with many companies looking for ways to reduce their reliance on Chinese imports. This has created opportunities for companies in other countries, such as Vietnam and Taiwan, to step in and fill the gap. However, it has also created uncertainty and instability, which can make it difficult for companies to plan for the future. The energy sector is another area that is being impacted by geopolitical tensions. The current situation in the Middle East, with rising tensions between countries such as Iran and Saudi Arabia, has created uncertainty and volatility in the oil market. This has had a significant impact on the price of oil, which can have a ripple effect throughout the entire economy. As we move forward, it will be important to keep a close eye on developments in this region and to be prepared for any potential disruptions to the oil supply. In the finance sector, geopolitical tensions are creating uncertainty and instability in the markets. The current situation in countries such as Argentina and Turkey, with high levels of debt and inflation, has created concerns about the stability of the global financial system. As we move forward, it will be important to keep a close eye on developments in these countries and to be prepared for any potential contagion effects that could spread to other markets. As we look to the future, it is clear that geopolitical tensions will continue to play a major role in shaping the global economy. As investors and consumers, it is important to be aware of these tensions and to take steps to mitigate their impact. This can include diversifying your portfolio, reducing your exposure to risky assets, and staying informed about developments in the global economy. By taking these steps, you can help to protect yourself from the potential negative effects of geopolitical tensions and to position yourself for success in the years to come.